Bazaar Morning Call. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Wednesday morning, bright and early. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. And with me, as always, my colleagues Sonia and Nigel. Morning, guys.
Hi, good morning. We're halfway through the week, but the Bulls have not made it through to the finish line just yet, right? I mean, there are some jitters that we're facing at the top.
I mean, the question is this just nervousness right at all-time highs, or is this something more, right? And I think yesterday's session kind of threw that question wide open, and I want to kind of begin with that. I'll come to the global stuff in just a bit. So markets sold off, right? And the question is, did we see just a shakeout, which is going to kind of be over in a day or two, and then kind of we resume the uptrend? It's happened before at all-time highs. Markets get, sort of flutter in the stomach, or just a little bit of nervousness, dithers, and then, a day or two later, we are back there. Or this is something larger. Many have pointed out that this could be the start of a slightly longer consolidation, maybe a sideways move. We'll find out soon enough. So the close yesterday was at the day's low, and I think this is the reason why this question is being asked a little more loudly. Yesterday, though, one has to say this is expiry week. Yesterday was Fin Nifty's expiry. So that's the reason why the outlook, straight away gets a little muddled. There was the HDFC impact as well, although the rest of the market also sold off. So it was not just HDFC which was adding to the pressure like it was in the first half of the day. The rest of the market also came off under pressure. Because of these two factors and the fact that there was the expiry as well, the question is, I would say that we need to wait for a day or two for more clarity to emerge in terms of the immediate direction that the market wants to take. It's entirely possible that this is not over on the move higher, that, dips at some point will be bought, but it could also be the case that we have, a day, two, maybe a slightly longer consolidation before the market starts to do that. Now, technically, what has added to the confusion that the Nifty yesterday is closed below that rising channel, which we were pointing to. That level is 18,296 as of day before yesterday's close. That's moved up a little bit. But the point is, it's not a very significant kind of close below that rising channel. So I don't want to make a big deal of it to say that, well, the uptrend is over and a big downtrend is starting or anything of that sort. Give it a day or two, I would say again. The bigger support for the Nifty comes in at the 20-day moving average. That is way off. That stands at 18,026 on the way down. We are still 300 points out from that level. The banks relatively outperformed the Nifty. Bank Nifty also lost about 0.4, 0.5%. Nifty lost more. So supports for the Bank Nifty come in at 43,700. That's about 200 points out. And then the 43,570 level, which is the lower Bollinger Band. 570 is that level. So first 43,700, and then you got support sitting at about 43,570. Now we come to the global stuff, right? And it's not exactly entirely all great. So the worry so far has been imminent recession. And overnight, we saw a bit of a change in theme and higher for longer. Higher interest rates for longer, that kind of conversation is coming back into the chatter, coming back into the market conversation in the US. And the reason for that is the data which we got. We got three sets of data points. The most important was retail sales, which, according to many economists, is stronger than expected. So consumer is in pretty good shape in the US. We had the industrial production numbers, which pushed back against this imminent recession narrative. And you also had housing numbers which came, which kind of says that housing should be okay going forward. And that's the reason why we saw some sort of rate cuts, which the market was pricing in by the Fed being priced out, and rate hikes being priced back in. We'll talk about this in greater detail. Equities responded. The S&P was down about 0.6%. NASDAQ was down about 0.18% in terms of trade. So the handoff from Wall Street itself is not all that great. I don't think Asia is doing very much. And I think the SGX Nifty on your screen is down about 40 points. So, as I began by saying, give it a day or two, let the market price action resolve itself after what we've seen at the all-time highs over the last 2 days, and let the market tell you what it wants to do next. This is, of course, if you're trading out there, if you're investing, I think, you stay put. No point trying to time the market for a few percentage points every time. Sonia.
Absolutely. It's just a matter of time that the markets will hit all-time highs. It's, kind of patience is being tested at the moment, right? But given take everything, today is going to be a weak start. I mean, the SGX Nifty is down about 40-odd points. Given that we've had weak global cues, our own markets could also open on the back foot. But remember, a lot of the damage was done yesterday. So yesterday was a weak session. This 18,300 to 18,400 level is something that the market is facing a resistance at. 18,400 was the high that we hit on Monday as well. So that could be a bit of a sticky zone, over the next few days until we get some positive trigger. For the global markets, as I said, the Dow was down about 300 points yesterday. It is this whole debt ceiling issue as well that's, nagging the market a tad bit. The Treasury Secretary Janet Yellen reiterated her warning that the government needs to raise the debt ceiling immediately. Otherwise, there could be some defaults as early as the 1st of June. So that's something that's playing on the market's mind and perhaps could keep a lid on the market's gains in the near term. Even in our own markets, we had some selling coming in from domestic investors yesterday, almost 900 crores or so. FIIs, though, continue to be buying. It's the 14th straight session that FIIs have been buying. So that money is coming in thick and fast. In terms of the data, there's a couple of things that I'm tracking. Globally, the retail sales were weaker than what the street was expecting in the US. So a couple of things that the street will watch out for over the next few days. Today, there's data on housing starts, building permits. There's some retail companies like Target that will be announcing their numbers. So all eyes will be on that. And back home, we are at the fag end of the earnings season, but we're getting some big earnings. Bharti Airtel's numbers were a bit on the mix, bit mixed this time around. So the revenues were below estimates, but the margins were a beat. And it was the lower India mobile business that really hit the revenues this time around. So that's an ongoing theme across most of the telecom companies in this quarter. So that's a stock that I'm going to keep on my radar as well. But give and take everything, I think that, the 18,400 level has become a bit of a ceiling for the market. We'll need some kind of, big trigger for this market to take it out, perhaps.
Well, that's right. Sona, yesterday was a weak trading session, but the HDFC twins, that was a technical factor in there because they went ex-dividend. And also the majority of that fall yesterday, we ended at the low point of the day, came in the final 30 to around 45 minutes odd. So if you pull up the intraday chart of the Nifty as well as the Nifty Financial Services Index, you'll see that, in fact, both of them, they ended at the low point of the day. And when that happens, that's telling you that is expiry related because the Nifty Financial Services Index, that played out the weekly expiry in yesterday's trading session. But getting to trade setup then, on the fall that we're seeing on the Nifty Bank itself, I'm not very, very worried because there were no big shots that were added out there. In fact, there was some unwinding of long positions on the Nifty Bank. The Nifty Bank, well, it should continue to lead unless, of course, we have a shocker that comes in from SBI whose numbers are there in the next couple of sessions. So, that's one point. If you need to move higher, the Nifty Bank needs to perform. And if yesterday wasn't a trend reversal, then we should see some bit of a bounce back. Given that we're off close around 150 points from the highs, the SGX Nifty is suggesting we gap down 40-50 points out, then maybe we see a bit of a bounce back from the lows of the day. The FIs, they added shots, 2 shots for every long position, and now the short positioning is at around 51%. On the option side, the 18,400, 18,350 call, well, they were getting written very, very aggressively. So at higher levels, we'll see some supply that's coming in there. But the put writing now, it's, moved to around that 18,150. There was some sense of buying as well at that level. So let's see how that one goes. But one trigger for the market, I think, which has been proved right over the last many, many sessions, is once the PCR moves to around 1.35 odd, you see a bit of a pullback. That's what happened yesterday as well. But it's cooled down now to sub that 0.9 odd mark, which brings us to the levels. You need to buy closer to around 18,150 to around 18,200 because that's where support lies. And on the upside, the recent high, which is at around 18,459, that's the resistance zone. The bears will be looking to defend that mark. On the Nifty Bank, 2 strikes were very active, 44,000 call and the 43,500 put. So going by those data points, well, you have a resistance zone. 44,250 on the upside, that's a bit of a resistance. On the downside, 43,400, in fact, that's the crucial level. The SGX Nifty suggesting a bit of a pullback. After yesterday's fall, well, I think at some point of time during today's session, risk-reward will favor the bulls. So let's see how this one goes.
Right. That's the sort of overall picture as far as markets are concerned. Before we go any further, let's quickly tell you what's lined up here in the first half hour of the show. We get you updates from markets across the globe. Adrian Movat Hong Kong SAR will join us to discuss what he's making of things. Adrian is back after a while on the program, so you don't want to miss that. Our research team will get you the top 10 stock ideas for the day, results, non-results, lots lined up there. At 8:30, we have Devin Choksi of KR Choksi with some fundamental stock calls and his view on stocks which will move today.
All right, well, lots happening on the show actually in the next 2.5 hours. So let's start off with a comment coming in from Gautam Dugar of Motilal Oswal, who says that the market should remain range-bound until any new catalyst emerges. He also says the market has digested the Karnataka elections well. However, due to the results, the central government may be forced to give out freebies and subsidies in other states. And if this becomes a model, this could create a fiscal challenge. At the moment, it is an academic threat, but if it becomes a norm, it could affect the fisc. He says they continue to like consumption, auto, banking, and large-cap technology stocks.
Okay, well, so that's views on equities. Let's get you some money market views as well. Kunal Sudani of Shinhan Bank says dollar index strengthened across the board, driven by higher US yields and mixed US data. He says hawkish remarks by Fed speakers lift bets for additional rate hikes and also boosted the dollar. He says keep an eye on the USD yuan approaching 7 levels. For the dollar index, he says the 100-day moving average hurdle of 102.9 can prod the bulls. For the USD INR, Kunal says 82.15 acts as a support, while 82.5 is a resistance.
Okay, and on the bonds, we have Neeraj Gambhir of Axis Bank, who says the 10-year benchmark bond traded in a range of 6.96 to 7.06%. He says buying momentum remains strong on firm auction demand despite negative global cues and tight liquidity. He adds the SDL auction also saw a decent demand with the 10-year SDL cutoffs in the range of 7.33 to 7.37%. For the moment, he says Indian bond yields are relatively decoupled from global markets and are reacting to local demand-supply dynamics. He also says the market will take further cues from auction demand and expects the 10-year benchmark bond yield to trade in a range of 6.9 to 7%.
Well, we have a lot of stock-specific action tracked for you, and we'll be getting to that list in just a bit. But for the time being, let's try into the list at least. We're looking at BPCL, Credit Access Grameen, LIC Housing Finance, Amber Enterprises, and JK Paper. Their stocks on the back of positive news flow. While it's 50-50 today in our top 10, we have 5 stocks that could be reacting to negative news flow, namely Bharti Airtel, JSPL, Reddington, Metropolis, and V-Mart Retail.
Okay, well, Adrian Movat is now joining us, investor at the Hong Kong SAR. Adrian, good to have you back on the program. Thanks very much for your time. Appreciate it. So, let's just kind of, since you're back after a long time, let me ask you where you're at in terms of your thought process of what global markets have in store for us in the near to medium term. How is data looking to you? And what's the most dominant theme which is likely to play out? Go on.
So we're seeing major equity markets do well. So we've had good year-to-date performance out of the US, Europe, and Japan, with Japan making multi-decade highs. And what seems to be going on there is that the large cap stocks in these markets are doing things like cutting costs, they're generating more free cash flow, and they're proving to have revenues that are a bit more resilient to some of the sort of macro headwinds that are out there. We've got much debate about what's going on in the interest rate outlook, in particular bond markets. We have the most inverted bond yield curve that we've seen since the Volcker years. Now, remember when Volcker was chairman of the Fed, he put the upper band of the Fed fund target rate up to 20%. So if we think about the inversion in the yield curve today, where you've got short-term rates at 5.25 and 10-year rates at 3.5, it's probably the most extreme in a geometric measure rather than arithmetic measure. So that leads to this very powerful, consensus around that there's going to be a recession. And that makes buying risk assets quite tricky because, if the consensus is very bearish, there's quite a good chance that you move up a wall of worry. Now, near term, we have obviously a major event, which is the US debt ceiling. The US debt ceiling has forced the US president to cancel his trip to Australia and Papua New Guinea that he was planning. And maybe that's a good thing if they're really focused on trying to resolve this. So I think we've got a really quite a complex outlook, let's throw into what's going on within emerging markets. Emerging markets have been disappointing year to date. There has been disappointment around the most recent China data. Although when you look at the stats, the economic surprise index in China is almost at its record high. It was previously higher back in 2006. So, to some extent, I'm a little bit surprised that people are so downbeat on the China data. And then finally, when we, look at some of the other emerging markets, there's a fair amount of event risk out there with elections in Thailand and also elections in Turkey, the Turkish elections going to a second round. So complex out there, but I think the story is very much one of large cap stocks in the major markets, which are proving to be more defensive.
Adrian, hi, good morning. So you're saying that, look at large cap stocks in any market that you're operating in, because, and especially the ones that are defensive. Got it. Given the scenario and the expectation of a recession in the US, how are you approaching markets like India? Because now we've seen some money come in thick and fast, especially from the foreign fraternity. I mean, it's been 14 straight days of large money into the Indian markets. Has confidence returned because valuations are looking more attractive than they did 6 months ago? Or is growth picking up here? And what is your own view on India now?
So I think what investors are seeing, is a trend. So there's a trend, whether it's the financials or the autos in India. So that's a positive statement on domestic consumption. And the drag on the indices has been from the likes of the Adani Group, from Infosys, from Cipla, from Hindalco. If you strip these out, India's year-to-date performance would look almost on par with some of the major markets, such as US, Europe, and Japan. So I think investors are seeing a theme. They're not anxious about the macro outlook in India, so are willing to play selective themes in that market.
Hi, Adrian. Good morning. When we last chatted, I think China, Taiwan, as well as Korea, if I remember correctly, they were coming ahead of India in the pecking order. Has that changed now? India has gone through a bit of a time-wise correction as well.
Yes, so we've got China and India sort of neck and neck at just up 1% if you look at the broader indices. But I would suggest that at the margin, macro concerns in China have built relative to macro concerns in India. And so, perhaps it's less competition in terms of the cash flow going into China relative to India. Now, what I would caution you a little bit on that is when you look at the large cap tech stocks in China, the numbers that came out of the likes of JD most recently, and then we've got a whole host of results this week, have actually proved to be reasonably good. And we're beginning to see some of those stocks, I think, sort of bottoming out and probably going to perform. And there is a chance that for these China tech stocks, that they do something similar that we've seen out of the likes of Microsoft, Nvidia, Tesla, Meta, etc., where there was extreme pessimism, valuations had got quite low. And actually, when the results came out, people were encouraged by those. And the results weren't a function of a very robust economy, but more about the robustness of the business and what management was doing.
Adrian, we'll leave it there. It's a good conversation as always. Thank you very much and hope you come back soon again for more. As you said, it's a complex situation. We'll see how it resolves itself. We'll take a quick commercial break here. Our list of stocks with our research team coming up next. Stay with us.
Welcome back. Well, the market looks like it's going to open on the back foot today. The SGX Nifty is down about 40 odd points. But it's a big day of trade today. Even tomorrow, you have a lot of big numbers coming through tomorrow. There's SBI, ITC, Bata that report their earnings. So plenty of stocks in focus. It's the fag end of the earnings season. So let's get straight to that. Bharti Airtel reported numbers yesterday post-market hours. Reema's here to tell us how the numbers look. Reema, morning.
Thanks so much for that. So for Bharti Airtel, it was a revenue miss, but margins and profits have come in line with expectations, in fact, slightly ahead. So on the top line, the company has delivered a consolidated revenue growth of just 0.5% versus estimates of 2%. The miss on the top line has come in on account of the India wireless mobile business, where the revenue growth has come in at 1%, lower than consensus expectations, and also trailing its peer Reliance Jio. That said, at the margin level, the company has put up a strong showing. Margins, in fact, have improved by 20 basis points to 52.2%. We were anticipating a bit of a decline. So effective cost control has really resulted in strong margins. Profits, consequently, are up nearly 90% on a quarter-on-quarter basis. But remember, the prior quarter, Q3, had an exceptional loss. The other miss in the numbers, apart from the miss on the top line, is the fact that ARPUs have been flat. The street was hoping for some ARPU improvement, the average revenue per user, because the company had initiated very sharp entry-level tariffs over the last couple of months. But that's not flowed through at the ARPU level. So ARPU at 193 is unchanged on a sequential basis. That's a bit of a miss. But on the flip side, the subscriber addition numbers continue to remain very healthy. Back to you.
All right, Reema, thanks very much for that. We have a discussion with the analyst lined up. Balaji Subramanian of IIFL Securities will be talking to us about the results and what you should do with the stock in a bit from now. Nigel, but JSPL reported numbers?
Well, JSPL, the stock has been weak of late, and the numbers were actually lower than what we were working with. On the top line, though, it was a little bit higher, but that's because realizations were higher. But that's where the good news ends, because the EBITDA number missed expectations by quite a mark. A few factors that played out. They had an inventory write-down out there, so that was 1 point of around 250 crores approximately. The second factor was they have been purchasing iron ore in Odisha, where they have their operations, and Odisha pricing was higher than what NMDC is pricing as well. So higher iron ore cost, and the benefit of coal didn't really flow through. So put those factors together, that's why the EBITDA did miss estimates. The profit number, well, that as well did miss estimates. The sales volumes, though, were higher on a sequential basis. On a year-on-year basis, though, they were lower by close to 2% because they had an unplanned shutdown at one of their facilities. Export percentage as a percentage of sales, well, that's moved up. Telling you the export market is reviving out there. But the EBITDA per ton, that came in much lower than what we were working with, missed by close to around 1,500 rupees odd because of the factors I just mentioned. And the PAT number, the miss was more, even though we had an operating miss because depreciation was higher. They took a write-off in the Australian mining operations, so that's what hurt them. And also we had an exceptional loss of around 150 crores because of write-off in some projects. Debt number came down marginally, but the management has said the debt number will not balloon off here. Remember, they're taking a big expansion in their facilities, so expect the stock to open up in the red. Valuation-wise, yes, it's always been attractive, but let's see how this goes. Sonal joins us, though, to tell us about BPCL. Morning, Sonal.
Good morning, Nigel. Well, BPCL will be in focus because board has approved a massive capex. It'll be to the tune of 52,000 crore rupees approximately. Three set of capex that the company has announced. One is at their Bina refinery, which is for setting up an ethylene project, and this will also be for upgradation of their Bina refinery as well. It will be costing 49,000 crore rupees here. Additionally, they will also be putting up 250 megawatt wind power projects. This is for captive consumption, both at their Bina refinery and their Mumbai refinery as well. And the total capex here will be to the tune of 800 crore rupees for the company. That is not it. They are also setting up third project for the company. And totaling all of that, that'll be to the tune of 52,000 crore rupees. Now remember, company has a debt in their books at around 68,000 crore rupees, and they will also be putting out their results. They will also be reporting the results on 22nd of May. So because of all this, BPCL will be in focus today. Okay, thanks a lot for that, Sonal. Well, Abhishek is with us. He's tracking a couple of names. There's Credit Access Grameen, there's LIC Housing Finance. Abhishek, over to you.
Well, Sonia, good numbers coming in from Credit Access Grameen. The gross NPA ratio has improved to 1.21% when compared to 1.71% in the previous quarter. The disbursal growth is robust at 48% quarter-on-quarter. So the AUM growth is healthy on account of robust disbursals as well. AUM growth is at 26.7% YOY and about 18.24% sequentially. We are seeing a higher, amount of disbursals flowing into AUM. So that's leading the AUM growth. Customer base is back to to pre-COVID levels or higher than pre-COVID levels, coming in at 42.64 lakh, up about 11.62% and about 8.25% quarter-on-quarter. The net interest margin is at 8-quarter high of 12.2%. For LIC Housing Finance, after a long time, we are seeing net interest margin expand. So net interest margin has expanded by about 28 basis point YOY and about 51 basis point on a sequential basis. The pain in disbursals continued. Like we saw in Q3, disbursals in Q4 have declined YOY and quarter-on-quarter. AUM growth that remains tepid at just 2.5% sequentially and less than 10% on a YOY basis. Asset quality on seasonal basis has improved in Q4 at 4.27% when compared to 4.75% in the previous quarter, and their P&L both in terms of NI and PAT is a beat on our poll. Back to you.
Okay, and Abhishek, thanks very much for that. Credit Access Grameen, of course, will be with us at 9:40 this morning. Numbers, as Abhishek pointed out, a good set. We'll talk about outlook going forward with the management. Now, more results for the quarter. Ekta has got that list. She's standing by. Ekta, morning.
Thanks for that. Well, I'll start with Metropolis. The revenue was down 7.6%. The street was anticipating a 2% decline. The margins came in at around 25%. Street was anticipating over 25% in terms of margins, and a revenue and a profit, which was 33.3 crores. The street was anticipating close to 40 crores in terms of profit. So maybe the stock would be in the red. The call is at 9 a.m., so the commentary would be important. Reddington, revenue up 26%, EBITDA 2.5%. Profit, however, down around 11%. And V-Mart, there's a net loss of around 37 odd crores, which is expanded on a year-on-year basis, but the revenue is up around 29%. I presume that the net loss is probably going to weigh on the stock this morning. So expect all three of these stocks to be in the red.
Thanks a lot, Ekta, for that. Well, lots of numbers coming through since it is the fag end of the earnings season. Surabhi is here with some more Q4 results. Surabhi, over to you.
Thanks so much for that. So first on my radar is Amber Enterprises. It was a strong set of numbers by them. It was a strong performance across all segments. The revenues were up 55%. The EBITDA was up 62%. The EBITDA margin was higher by 30 basis points, came in at 6.8% versus 6.5% same time last year. And the net profit was up 82%, came in at 108 crores. Now the RAC and the component segment, which is 80% of their revenues, there the revenues were up 55%. The profitability was up 54%, and the margins were maintained at 6%. Next on my radar is JK Papers. The numbers were better than estimates, but there was some sequential decline on their EBITDA margin front, but that was on expected lines. The revenues were up 28%, the EBITDA was up 44%, and the margins have come in at 28% versus 25% same time last year. Now, the management has said that higher volumes along with increased realizations has led to a better operating performance, although they have witnessed reduced selling prices in certain product segments, but that is in line with the global prices.
All right. Thanks a lot to our entire research team for joining in and helping us prep for the day. Here's a quick recap in case you missed out on any stocks. Stocks with positive news flow, there's BPCL, Credit Access Grameen, LIC Housing Finance, Amber Enterprises and JK Paper. While stocks with negative news flow, there's Bharti Airtel, JSPL, Reddington, Metropolis and V-Mart Retail. Okay, let's also get a quick grip on what's happening in the world of commodities. There's plenty happening every day. So Manisha is here as always to give us a roundup of all the action there. Manisha, good morning.
Morning, Sonia. Thank you for that. Well, yeah, the crude oil prices have seen a decline for a second straight day on a surprise inventory build-up in U.S., up by nearly 3.6 million barrels. And then you have weak economic data from U.S. and China. The G7 meeting in Japan on May 19th and 21st, where G7 is looking to target sanction evasions involving third countries. There have been statements from Europe against India as well. So that really seems to be pulling prices down in the markets right now. And we are trading below $75 per barrel yet again. The metals as well have extended decline on weak economic data from China. You have copper prices back at 5-month lows. Zinc is trading at October 2020 lows. We also have seen the gold prices come off from its highs. It's broken below $2,000 per ounce. It's trading at a 2-week lows as well. The strength in US dollar index is yet another reason that's weighing on many of these commodities.
All right, Manisha, thanks very much for that. That's commodities in focus. More on that later. We take a break here. We will be speaking with our first management of the show. Granules India reported numbers, in line set of numbers for the fourth quarter. But there's other stuff like increase in their capex for FY24, which the market is focused on. We have the management joining us after the break. Devin Chokshi, as promised, will also be joining in just a bit. Lots of stocks to get his views on and how they start trade. Stay with us.
Welcome back. You're tuned into Bazaar Morning Call. Well, as promised, let's get straight to our first management on the show. Granules India, that's the first corporate we're interacting with today. The company's Q4 revenue growth was above what the street was working with. Margins were more or less in line. Mr. Krishna Prasad Chigurupati, the chairman and managing director of the company, joins us on the show. Good morning, Mr. Chigurupati. Thanks so much for joining in. Well, a couple of questions. First, on the outlook for FY25. I know there are various verticals, but on the whole, last year you did around 4,500 crores. What kind of a growth number you're looking at? And keeping that in the backdrop, is the price erosion, most of it behind us now? What can you guide for in terms of a growth and margin outlook for FY24?
The growth, as we expect, for the last 5 years, we've been doing a CAGR of about more than 20%. We expect to keep that up and going forward in the next few years too. And regarding margin expansion, the price erosion in the US seems to have reduced and seems prices are stabilizing. For some of the products, people have stopped production. But for some of our products, the situation is slightly different. But we expect this year prices will stabilize. We may not see too much erosion. And margin expansion may happen or will happen from newer products and newer launches. We expect quite a decent launches this year in FY24, and I think they will contribute a little margin expansion. We cannot put a number today, but we see the margins increasing a little bit.
It'll be better than last year, though. Last year did 20%, so a little better than last year?
Yes, I expect. Fractionally better.
Okay, that smile on your big smile on your face says it all, that the margins will be better perhaps. Got that. Mr. Chigurupati, good morning and thanks for joining us. You know, your performance in the paracetamol space was very strong this time. Can you tell us what was the pricing like in terms of paracetamol API and the finished dosages in this quarter? And you've been guiding for a double-digit growth in this space over the next 2 to 3 years. Is that something that you hold on to? Can you give us some numbers?
Cannot give you any numbers, but definitely there's going to be decent growth. And paracetamol, we have been in this product for more than 30 years, 35, 37 years. And we clearly are the world leaders today. We are the largest manufacturers of this product. We sell into many, many innovative brand companies. Each country's leading manufacturers buy from us. And today, the growth in paracetamol is driven mostly by not only volume of the API, but by the value-added products like PFIs and finished dosages. So finished dosages constitute more than 50% of our total paracetamol sale. And this is what we expect will give us a steady business. And the expansions we are planning in paracetamol, today we have 30% of the world market. And we expect to go to at least 50% in the next few years.
Okay, so you're saying you expect to go from 30% to 50%, but can you tell us what was the pricing like in the paracetamol API? I mean, some trends that you can give us. And also coming back to, the question that Nigel was asking, there was a price erosion that you saw in Q3 of over 10%. What was it like in Q4, and has the price erosion subsided compared to what you've seen in the preceding quarters?
Yes, let me answer the price erosion first. Yes, it has subsided. And it has not come to zero, but it has come down. And this year we expect that definitely the erosion may stop. I cannot say the prices will go up. And again, the prices are just for paracetamol are a function of the raw material prices. Raw material prices across the world have come down, and so did the prices of the finished product. Margins continue to be the same. Okay. Last quarter and last year, most of our growth in paracetamol was driven by API because we did an expansion of API, and that takes a while to convert into FDs and PFIs. So as we go forward, as we convert more paracetamol into FDs, we see margins creeping up and pricing going up too.
Okay. Mr. Prasad, good morning. Let's just start with, just go to CAPEX, right? I mean, you are saying that you will now spend 700 crores in CAPEX in FY24.
Yes.
That is a substantial increase from what the market knew earlier. Could you tell us, what will this take the net debt to in FY24? Where do you see it going? And are you entering a CAPEX-heavy period over the next 3 or 4 years? If you can give us some sort of broader perspective as well.
For 24, out of the 700 crores which we are planning, 250 crores will go for the green initiative, which is a major step for Granules, and we expect to see a lot of benefits out of this. And 250 crores will go for the formulation plant, which will be getting completed within this year, and that will add another 8 billion dosage capacity to the existing 24 billion capacity, and 200 is going to be for regular CAPEX. And as we go by, we see CAPEX increasing to decent levels, maybe around the same level or maybe a little lesser. But the funding for the CAPEX, most of it will be going into the green initiatives. We've already said that 2,000 crores has been earmarked for the green initiative over the next 5 years. Mm-hmm. So, however, even though we are quite confident of our cash flows, we had decent cash flow last year, and we expect decent cash flows going forward too. We are confident that our cash flows will be able to take care of the CAPEX. Last year, after the CAPEX, we had a little free cash. Yeah. However, in spite of being capable of investing ourselves, we are looking at options. A lot of investors, a lot of funds and different organizations have approached us for funding on easy credit terms because it's a green initiative. And a lot of people are also interested in participating in equity. So as we go forward, we'll weigh our options, and we may not really use our free cash to fund this.
All right. So, sir, a couple of things you're saying. So over the next, so there's this 2,000 crore number over the next couple of years. Is that in the ballpark?
Next 5 years.
In terms of,
next 5 years.
Next 5 years, 2,000 crores of
CAPEX for green initiative.
Okay. 2,000 crores over the next 5 years for green initiatives, and you're saying that you may fund this by selling some stake. There are people who are interested.
Possibly.
You could do some equity dilution in the company, in Granules.
No. We have a subsidiary company for the green initiative. It's called Granules C0, which is carbon zero, which is only focused on green. And that is the company we may dilute a little bit of stake if required and if we get the right valuation. And we may use some of the low-cost funding for long-term debt, and our short-term debt in the parent company will come down because we don't have to fund the green initiative. Net debt will be the same. Consolidated level will be always less than, net debt EBITDA will always be less than 1.
Okay. All right. Just to clear the air, so the net debt is sub 800 crores. It will continue to remain sub 800 crores, right?
Around 800 crores. Today it's
around 800 crores. Got it. And to clear the air on the equity raising, it will be in this subsidiary of yours, not in the parent. Or is there a outside chance that you could dilute at the parent as well?
No way. Absolutely no.
Okay. Mr. Chigurupati, just before we let you go, if you map the last 5 years for the company, it's been a very strong performance that you've seen, a revenue growth in excess of 22%, EBITDA growth of almost 27%. What could the next 5 years look like? Is this a model that you can replicate, or do you think it could get better in terms of compounded growth?
We think we will be able to maintain this, and there is a possibility of growing better. But we'll see as we go by. So many initiatives which we are taking, which could yield fantastic results. But let's see as we go by. The green is something we are banking on. In addition to whatever we are doing in the parent company, we are coming up with high technology APIs and high technology complex formulations. So we are very hopeful, but let's wait and see.
Okay, we will let you go on that note. Thank you as always for joining in and speaking to CNBC TV18. Appreciate your thoughts. That's Granules India, very confident about the future. They say that price erosion in the US has also reduced. It's stabilizing now, and growth rates will be about 20% compounded over the next few years. Devin Choksi of KR Choksi is joining in to give us his view. Devin, any thoughts on Granules? The management is sounding optimistic, but the stock has been under quite a bit of pressure. Last 6 months, the stock is down in excess of 20%. What do you do now?
Good morning, Sonia. Well, I think the important part, which I think the management also explained, they have been successful in arresting the kind of a fall in the prices. At the same time, I think bring up some amount of recovery into the margins. And as a result of which, I think that is what is getting reflected also in the current quarter's result. So obviously, I think there is a reason to smile for a fact that I think the situation is turning better for the company per se, which is also the case, I believe, with many of the other pharmaceutical companies. In last 6 months or 9 months, I think due to the high cost pressures, I think most of them have one way or the other suffered, on the margins. I believe, that situation is now coming to some kind of a control. May not be seen immediately in one quarter unless the pipeline inventory gets cleared for many of them. But I would like to believe that with the cost remaining under control, you should be seeing relatively better margins. Particularly for Granules, I think the contribution from API segment, remains on a very high side, at around 30% plus, which possibly also, is the result for which I believe that the company should be in a position to perform relatively better in the coming year with the stable margins.
Hi, Devin. Good morning. Devin, what about JSPL? Those are one of the disappointing numbers. I'm not talking about Bharti Airtel because we'll have an analyst who will be joining in just a bit. But JSPL, the numbers were disappointing. Valuation-wise, well, it has some bit of comfort. How do you approach the stock at around 560 rupees?
Well, I think we don't have much view on this particular commodity segment, so would refrain from putting across view at this point of time.
Right. From the housing finance space, LIC Housing Finance, they came out with a set of numbers. The numbers looked mixed. What was positive was the NIMs. But the sector has been doing so well, you're expecting better growth, right, from the housing finance company. Your view?
Well, I think those housing finance companies who have basically higher amount of concentration onto mid-tier to the high end of the housing finance business, probably are the real estate, that they are funding also at the same time. I believe that they would be relatively in a better position compared to typically a low margin segment. A low margin segment would block the volume growth, definitely for sure. No. But I don't know, whether they would be having enough amount of margin comfort coming up at the same time. So we stay comfortable more with the likes of HDFC and even for that matter, Bajaj Finance, who is a subsidiary in form of Bajaj Housing Finance. These are the companies where we remain relatively more comfortable as far as outlook on the housing finance business is concerned.
Okay, all right, Devin, stay with us. More stocks coming your way in just a bit. We want your thoughts on Credit Access as well, which reported a solid set of results once again. We'll take that break. We are back. Our technicians will be with us as well. Prakash Gaba, Sudarshan Sukani. That should be an interesting chat you don't want to miss with all that is happening at all-time highs, nervousness, a shakeout or something more. So that comes up in just a bit. Yesterday. Anuj, morning.
Morning, Bishant. Well, yes, the market fell under its own weight yesterday. Everything looks positive. Then, give you a bit of a jerk, and that's what happened yesterday. Of course, the bank nifty was impacted by a couple of factors. If you look at what's happening in terms of the data, FIs continue to buy big, and DIs have turned a bit of a seller. But the global market nervousness on account of this US debt ceiling is, I think, now going to be the biggest issue, because that perhaps could provide an entry opportunity, or maybe even as early as today. But let's see. Now, in terms of Nifty, I think I'll watch out for a couple of levels. The most important level for me today is 18,223. That's the 10-day exponential moving average. Normally, Nifty has taken support here. And the big support zone is at 18,100 to 200. Big resistance for Nifty lined up at 18,380. That's where it fell from yesterday, and 18,450, which has been the high of last 2 days. I think it's the bank Nifty, which of course has been the one which has troubled a bit over the last couple of days, because 2 days in a row, it's gone to 44,150, almost thereabout, and then slipped from there. In fact, yesterday it slipped quite a bit. It's extremely overbought even after the decline, and my sense is some correction is going to be healthy also because it runs a risk of some kind of a double top. Just to put things in perspective, the 10-day exponential moving average is placed at 43,500 and 20-day exponential moving average is placed at 42,928. So maybe if the bank nifty comes here, it takes support here, or you wait for it to finally cross that all-time high and tell us that it's ready for life above that. I think that could be another strategy.
All right. Anuj, thanks very much for that. So next, I think, couple of days, we'll find out some of the price action which will resolve itself. Devin Chokshi is still with us. Thanks for waiting, Devin. I just want your thoughts on Credit Access Grameen. It's not for little reason that sometimes it is referred to as, the HDFC, like quality, at least in the MFI business. It's demonstrated that very strong growth numbers over a long period of time. And business has done exceptionally well. What's your sense? Would you buy the name?
Yeah, I think, Prashant, on operating parameters, the performance is absolutely brilliant. I think both on the year-over-year basis as well as on a quarter-over-quarter basis. When you see the growth in NIM, you see the growth in the AUM, the disbursement, and including, I think, provisioning. I think these numbers are absolutely, extremely convincing from that perspective. And maybe I think one of the points which I am looking at, in the interior segment in the country, there is a good growth coming up, and I think the demand situation remains extremely convincing from the consumption point of view. That's where probably I think some of these MFIs would start producing better results. In fact, I think many of the smaller ones also have been started producing relatively better results. As long as the economy continues to grow, I think this segment will produce relatively faster and super results as I see. Not too sure immediately whether I would buy into the stock, but I think definitely it's a case for considering in the portfolio.
Okay. The other stock I wanted to discuss with you was Oberoi Realty. Numbers came through and, we had the operational numbers earlier, but these are some stellar, performances that we're seeing from the real estate companies. I mean, Oberoi Realty has seen its highest ever gross booking values of over 5,100 crores. But the stock has also had a fairly good run. It's up 20% from the lows in Feb. Do you see more upsides here?
You said it all, Sonia. I think most of the companies in anticipation of the better results coming in have had the significantly higher amount of run on the stock price. So from valuation perspective, I think they are early priced at this point of time. Maybe if one has to buy into the stock, then some kind of a corrective downside or a softness in the stock price could possibly be a better time to buy into. I believe that the companies which are having higher amount of inventories with them are having better visibility at this point of time. And as a result, because of the bookings, of course, that they have done, that is why they have better visibility on the revenue and the profit front. But if the price matters, I think the valuation-wise, they will run a little ahead of time as I see it currently.
Do you like the QSR space, Devin? I think Goldman, has initiated coverage in that space today. Barbecue has been in a slumber for a long time. It woke up a little bit, was up about 5-6%. But others have also been hurting, other stocks in that space. Your thoughts and what do you like there?
Honestly, I think we feel that the demand side situation, is extremely convincing. Given the kind of a spending that the consumer is making, that there is no second thought on this particular subject of having higher demand continuing for most of them. However, I think one is not completely sure about, at what valuation one should be buying it, because if the growth is not seen sustainable for a variety of reasons in this format, then possibly I think higher valuation will hurt you at some point of time. So that is the only reservation that we have for adding this to the portfolio.
Okay, Devin, thanks a lot for joining us. Have a good morning. We just have about less than 10 minutes before the pre-opening rates kick in. So we thought we'll go across to our technical guest. Prakash Gaba joins in. Sudarshan Sukhani is also with us. Gentlemen, morning to both of you. We are facing a bit of heat around those all-time highs, Sudarshan. I think, the market wants us to be a bit more patient. But how are you feeling about that today? Would you buy the dip on opening or would you wait a bit? And, what are the levels to watch?
Yeah, good morning, Sonia. You're quite right. The market is getting nervous. I would look at it the other way around. Yesterday's price action tells me that the Nifty is again going into a trading range. Now, that's not unusual. The markets rally, then they go into a huddle, into a range, and eventually, up till now, have broken out on the upside. But it's always a question mark whether we will break on the upside, make new highs, or surprise everyone and break down from that range. The range boundaries for me are about 18,200 and 18,450. So inside this 250-point range, once we identified the range as we have done now, there is very little to trade. If the Nifty falls towards 18,200, intraday traders may look to buy it with a tight stop loss, taking some intraday gains. But till then, be patient, let this range work itself out. Whichever side it breaks, we should take that trade now.
Okay, all right, and Mitesh as well is with us. Prakash Kaba as well is with us. Apologies for that. Hi, Prakash. Good morning. Prakash, how would you approach the index? Yesterday, we had a bit of a weak session. We're not too used to that. But do you believe that you'll buy the dip today or avoid it?
Good morning, Nigel. Yes, I'm moonlighting for Mitesh today. Well, structurally, when I feel market expands and contracts, it breathes in and breathes out. It inhales and exhales. So what we have seen run up too fast, some kind of a rest is needed. Yesterday's low is a good low to work with if it has to bounce back from. It's beautiful low. Now, if it cracks, possibly we'll see 18,100 zone. So it's at a make or break zone. So far, it looks weak. But in the larger time frame, it looks like a trading range. So possibly it dips viable as long as 18,100 is closer to that area if it comes. Or if we see a gap up after 1 hour or so, we see a strength, that's a place to buy. Otherwise, I think best rest out. So that's what I look at Nifty. And Bank Nifty, I think 43,200 is a very, very strong support zone to work with. If it comes down to those zones, those are viable zones, I would say. So far, structurally, the market is still up. It's just breathing in.
Sorry, Prakash, good morning. You're saying, so we closed pretty much at the lows. You're saying those lows should hold. Otherwise, you headed to 18,100. Just to get that right.
Absolutely. The place is just right. It's beautiful. Okay. It's a classical place where it should buy. It's make or break zone. Yesterday's low. Okay. If it holds, it's a good place to bounce if it has to. If not, I think it can do 18,100.
Fair enough. Sudarshan, what would your trades be?
I'll start with Coforge. Coforge has seen a very decent decline. That's probably a correction that's over. So Coforge is a buying opportunity, but keep it a positional trade if you can. Is a buy with a stop under 4,060. Syngene is an intraday short. The stock had a very handsome rally. After that, it's been trading in a range for 10 days and it's broken down from that range. So it's an intraday short. Just keep a stop above 710. Don't overstay your welcome. You can get some points on the downside. Cipla is another intraday short. You know, I never understand pharma stocks. They suddenly go up, then they suddenly come down. And it's one sector that's beyond me. But for whatever it is worth, the charts are not pretty good. So Cipla is an intraday short with a stop above 942. And finally, MCX is a buy on dips opportunity. It's at its lows, but it's now in a range after that big decline. If we are correct about the lows, we could actually end up buying at the best possible location. Keep a stop loss in case it doesn't work out. The stop is 1340 and MCX is a buy.
Okay, thanks for that. Well, Prakash, hi, good morning. So, you know, I wanted your stock ideas as well. And we were discussing these real estate stocks, right? I mean, they've all had a really strong run. In fact, the Nifty is up 1% this year, but the realty index is up over 8%. So there's a big outperformance there. Do you see that continue? And what are the stocks that you're looking at today?
Yeah, real estate, certainly as a sector is looking good. DLF was looking good. Godrej Properties, I like it. The way it's come down from 2,500 to 1,000 zones, looks like it's a good place to bounce. I mean, give some time and space. I think it can go up. Godrej Properties, I like it specifically. It can go to maybe around 1,750, 1,800 zones. But it will take its own sweet time. The real estate space, yes, I like it. Stocks that I like it today is Exide Industries. I like the chart structure. Seen some correction, some kind of a consolidation, given a breakout yesterday. And trading at somewhere closer to 194 or so. I think Exide Industries can climb to 205 to, I think 200 to 205 zones. I think it can go there. It dips, if you get it until 192 is viable. Stop needs to be slightly deep around 190 and trade long. So if you get dips on Exide, it's viable. I think it's heading up. Second stock that I like is United Breweries. Again, a good bounce from the levels of around 1350, 1400 zones. Trading good, 1448 is the place it's trading now. Possibly we'll see levels closer to around 1500 zones. Matter of time, it should go there. Stop below 1420 should be fine. United Railways.
All right, gentlemen, we'll leave it there. Thank you very much for your time. Prakash and Sudarshan, we'll keep a watch and we'll speak with you soon again. Time for a quick break. We come back with the pre-opening rates, which are just, 2-3 minutes away. But we also shine the spotlight on Bharati's numbers. And Balaji Subramanian will be with us of IIFL Securities to help talk us through what the results will mean for the stock.